If you didn't know already, today was an incredibly volatile day. In the past video or two or three, maybe, you could argue, we've been buying stocks, talking about buying stocks, and talking about the stocks we're buying and why we're buying them. So you would think coming into today, we would be celebrating, super happy that we saw this reversal, and once again, correct. However, that is not all entirely the case, and I'm going to explain some things and explain how I'm reacting to this incredibly volatile in both directions day. So the market opened down. We saw it down in the pre-market. In the pre-market, I began unloading some of my tech stocks that I had bought, and some of them I had, or all of them, I had good fundamental reasons for, but I did not like the fact that this was the record, or basically highest core inflation read in 4 decades. We've been at, quote, peak inflation, but that doesn't really look like it's the case. Maybe we're not going to get the maximum CPI number, but we're seeing tremendously high reads in food inflation and in healthcare inflation. And we're going to talk about energy in a second. But food and healthcare inflation, very important areas of the market. The Fed is trying to suppress demand, bring demand down. But does it matter the environment for food? Are you going to eat less because the economy is down? I sure hope not, because if that's the case, we have a tremendously difficult situation on our hands. Food is something you gotta eat. You gotta eat food. It's the oil of your body, basically. Healthcare, same deal. I guess you're not gonna be able to go to the doctor if it's very expensive, but golly, do we want that? No. These areas of the market, of the economy, having inflation rates significantly higher than the 2% and significantly higher than the final CPI read. So there's reasons for concern in this CPI report. There's no way to sugarcoat this. What I did was I took some of my high risk stuff off, or higher risk stuff off, and I went into AT&T and energy stocks. And I'm just consolidating. I'm just bringing everything very, very, to my core theses. I'm not going to deviate from this right now at this moment. I've got about a third of cash. I've got about a third of energy stocks. And I've got about a third of stuff like AT&T, Cleveland Cliffs, MP Materials, Jumia, sprinkled in. Okay, I've got that random third. And if anything is going to go up, it's probably going to be energy and cash. Those are probably the two things that I'm trying to levitate. So what do I think happens from here? Well, I don't know how long the rally is going to continue, but I can list a couple reasons why I'm not too excited about it. One, because it seems to be instigated by a very tame 10-year yield. We saw this yesterday. We're definitely seeing this today. A very tame 10-year yield today in the face of a now priced 75 basis point hike in December, which wasn't the case yesterday. Okay, that means rates are going up regardless. A 20 basis point move and where the Fed funds rate is supposed to end. We're just continuing to revise up and up and up, and the 10 years below, like it's down. It's not doing anything big. And it bounced off an interesting level today. It came down below 3.9, then went right back up to 3.9.5. Interesting moves. I'm not totally convinced that we can have a face ripper everything rally, because that's what today's action's indicating. It's indicating everybody's underinvested, everybody's off sides, everybody's going to have to run in to get back on sides. And that was the action we saw today. I don't think that is the correct decision. I think very shortly, over the next couple of days, Fed members are going to come out and they're going to pour cold water on this thing. I want to talk to everybody about An example of poor performance I've had in the fund, because while we do phenomenally here, we have periods where things didn't go so much our way. I believe it was the May CPI. If you look at our chart, it's around May 4th. May 4th, we have a Fed decision. We get 50 basis points instead of a feared 75 basis points, and the market rallies tremendously. We start the day down, the Fed decision comes, the market ends up 2 or 3%. The next day, we give it all back, and I believe, and then some. Things like this can happen, and they do happen, and they might happen here. I'm not getting too confident here about a rally. I mean, the inflation was not so good. I thought it was going to come in a little hotter than expected. I just figured that would be the case, but it came in a little bit worse. Rather, I thought it was going to come in a little worse, a little higher than expected. Came in a little higher than expected, but there were areas that paint a not so good picture. I mean, there's nothing. We talked about yesterday how everything was, kind of just pushing along. Well, things are kind of just pushing along. We talked about how the economy is still holding upright. Well, the economy is still holding upright for now, but if everyone's food and healthcare costs are going up, and next is going to be energy. So we want to get into energy before we conclude this video. Fear going forward around inflation. Well, if your fear is inflation continuing, the fear going forward is that energy prices are coming back up. The SPR is ending, OPEC is cutting, the economy is staying strong, it seems. There's not natural gas, coal supplies are difficult to come by, I suppose. Nuclear seems to be down. Extra oil demand, people are gonna have to burn oil to heat their homes, petroleum. So, I think we all just need to take a calm, deep breath, not expect a whiplash up. That's just my opinion. It might happen. Maybe we get a face rubber to 4,000. I'm choosing to consolidate tightly and kind of turtle shell here in cash, energy, and a few high conviction names that were able to make the cut. I don't know what my performance is going to be like the next couple weeks. I can underperform. The market can rip. Energy prices can stabilize. I might not see much there. I'll have a ton of cash on the sidelines, and I'll have just a few names providing me some gains. That might happen. And I think I have to be okay with that because, I mean, we're seeing tremendous food inflation, tremendous healthcare inflation. We're going to be getting even more energy inflation. Energy's going to, and this food inflation, you would think, oh, energy prices coming down, that might help food. It apparently did not. So, deep breath, turtle shell. I've laid out the specifics. That's today's video, and until next time, peace out.